The expanding world of financial technology, FinTech, a deep dive in recent years. The financial technology, FinTech, industry has undergone rapid expansion, driven by innovations that are reshaping the way individuals and businesses manage, access, and utilize financial services. FinTech is not merely a buzzword. It represents a fundamental shift in the financial services sector, leveraging technology to create new opportunities for efficiency, inclusion, and transparency. The following topics explore various aspects of FinTech, with a focus on its transformative potential through blockchain, open banking, peer-to-peer lending, artificial intelligence, AI, and more. 1. Evaluating the impact of blockchain technology on financial services. Blockchain technology is widely regarded as one of the most significant innovations of the 21st century, with its decentralized ledger system providing secure, transparent, and immutable records of transactions. In the financial services industry, blockchain has the potential to streamline processes, reduce operational costs, and enhance security. Blockchain technology's impact on areas such as cross-border payments, asset management, and trade finance has already begun to revolutionize traditional financial services. Cross-border payments, for example, are often burdened by delays, intermediaries, and high transaction fees. Blockchain's ability to offer near-instantaneous, secure transactions without the need for intermediaries can drastically reduce costs and improve efficiency in these areas. However, the adoption of blockchain technology is not without challenges. Regulatory uncertainty, scalability issues, and the integration with existing financial systems present significant barriers. Financial institutions must carefully evaluate how blockchain technology can be integrated into their operations while adhering to compliance standards. Future research could focus on the scalability of blockchain solutions and the regulatory frameworks that will be needed to support widespread adoption in financial services. 2. Investigating the implications of open banking on consumer data privacy and financial services competition. Open banking represents a new paradigm in financial services, where consumers can grant third-party financial service providers access to their banking data through secure APIs, application programming interfaces. This increased openness fosters competition by allowing new players, FinTech firms, to offer innovative financial products and services. Consumers benefit from personalized offerings, such as budgeting tools, tailored loan products, and streamlined payment solutions. While open banking promises increased innovation and competition, it also raises significant concerns regarding data privacy. Consumers' financial data becomes more accessible to multiple entities, raising the risk of data breaches and misuse of sensitive information. Moreover, open banking disrupts the traditional monopoly that banks have over customer data, forcing these institutions to adapt or risk losing market share to more agile FinTech firms. Regulatory bodies are grappling with how to create a balance between fostering innovation and ensuring data privacy. Research into the implications of open banking on data privacy can provide insights into how best to protect consumers while encouraging competition. This area also raises questions about the ethical use of data, consent management, and the transparency of data sharing agreements. 3. Assessing the role of FinTech in financial inclusion in emerging markets. FinTech's potential to enhance financial inclusion in emerging markets is one of its most transformative aspects. In regions where traditional banking infrastructure is lacking or inaccessible to large populations, FinTech provides alternative solutions for accessing financial services. Mobile banking, digital wallets, and micro-lending platforms have enabled millions of unbanked or underbanked individuals to engage in financial activities such as saving, borrowing, and making payments. In countries across Africa, Latin America, and Southeast Asia, FinTech solutions are playing a vital role in reducing poverty and supporting economic growth. For instance, mobile payment services such as M-Pesa in Kenya have revolutionized financial access, allowing users to send and receive money securely using their mobile phones without needing a bank account. However, while the promise of FinTech for financial inclusion is clear, challenges remain. High levels of digital illiteracy, unreliable internet connectivity, and regulatory hurdles can limit the reach and impact of FinTech solutions in some emerging markets. Future research could focus on the socio-economic factors influencing FinTech adoption in these regions and the role that governments and international organizations can play in facilitating fintech-driven financial inclusion. 4. Analyzing the role of peer-to-peer lending platforms in promoting financial inclusion and their impact on traditional banking systems. Peer-to-peer (P2P) lending platforms have emerged as a powerful tool for promoting financial inclusion by offering borrowers access to funds without going through traditional banks. These platforms connect individual lenders directly with borrowers, typically at lower interest rates than those offered by banks. P2P lending has gained traction as a popular alternative for individuals and small businesses that struggle to secure loans through conventional banking channels. For borrowers, P2P lending provides easier access to capital, while for lenders, it offers attractive returns on investment. However, the rise of these platforms presents challenges for traditional banking systems, which face increasing competition in the lending space. Banks may need to rethink their lending models or explore partnerships with P2P platforms to remain competitive. There are also regulatory and risk concerns associated with P2P lending. The lack of strict oversight and the potential for defaults make it a riskier option compared to traditional banking. Research could investigate the long-term sustainability of P2P lending platforms and how their growth may reshape the broader financial services industry. 5. Examining the cybersecurity challenges faced by fintech firms and the regulatory measures to ensure data protection and financial stability. As fintech firms continue to handle large volumes of sensitive financial data, they have become prime targets for cyber attacks. From data breaches to identity theft, cybersecurity challenges pose a significant threat to the reputation and stability of fintech companies. The industry's reliance on digital infrastructure means that any security lapse can lead to severe financial and reputational damage. Governments and regulatory bodies are increasingly focused on creating robust cybersecurity frameworks to protect consumers and financial markets. Regulations such as the General Data Protection Regulation (GDPR) in Europe and the California Consumer Privacy Act (CCPA) in the U.S. impose stringent data protection standards. However, as cyber threats evolve, it is crucial that these regulations keep pace with technological advancements. Research in this area could focus on identifying the most pressing cybersecurity threats faced by fintech firms, analyzing the effectiveness of current regulatory measures, and exploring the role of emerging technologies such as blockchain and AI in enhancing cybersecurity. 6. Examining the regulatory challenges and opportunities in the fintech ecosystem. The rapidly evolving nature of the fintech industry presents both opportunities and challenges for regulators. On one hand, fintech innovations have the potential to increase competition, improve efficiency, and offer consumers better financial products and services. On the other hand, the pace of innovation often outstrips the ability of regulatory frameworks to adapt, leading to uncertainty for both fintech firms and consumers. One of the key regulatory challenges is balancing the need for innovation with the need for consumer protection. As fintech companies operate in a largely uncharted regulatory environment, there is a risk of consumer exploitation, data breaches, and financial instability. Regulatory sandboxes, which allow firms to test new products under regulatory supervision, have emerged as one solution, fostering innovation while ensuring regulatory oversight. Research into the regulatory landscape can help identify gaps in existing frameworks, highlight best practices for balancing innovation with regulation, and explore how international cooperation can create harmonized regulatory standards for the global fintech industry. 7. Assessing the impact of artificial intelligence on the delivery of financial services, customer experience, and operational efficiency within fintech firms. Artificial intelligence (AI) is increasingly becoming a cornerstone of the fintech industry. AI-powered algorithms are transforming the way financial services are delivered, from automating customer service through chatbots to providing personalized financial advice and detecting fraudulent activities. AI improves operational efficiency by automating processes, reducing human error, and enhancing decision-making. For example, robo-advisors provide investment management services at a fraction of the cost of traditional financial advisors. AI-driven fraud detection systems are capable of analyzing vast amounts of data in real time, enabling fintech firms to respond to potential threats swiftly. While AI benefits to the financial sector, it also raises ethical questions and concerns about transparency. The use of AI in decision-making processes, such as credit scoring, can lead to biases if the underlying algorithms are not properly regulated. Research in this area could explore how AI is transforming the fintech industry, as well as the ethical considerations and regulatory measures needed to ensure that AI is used responsibly. 8. Analyzing the adoption and impact of cryptocurrencies on traditional financial systems. The rise of cryptocurrencies, led by Bitcoin, has introduced a new paradigm in the financial sector, challenging traditional financial systems and central banks. Cryptocurrencies offer a decentralized, peer-to-peer method of transferring value, bypassing the need for traditional financial intermediaries such as banks. For proponents, cryptocurrencies represent a more democratic and transparent financial system, free from the control of centralized institutions. However, critics point to the volatility, lack of regulation, and potential for illicit activities as major concerns. Governments and central banks are exploring the creation of central bank digital currencies, CBDCs, as a way to harness the benefits of digital currencies while maintaining oversight and control. Research on the adoption and impact of cryptocurrencies could focus on the regulatory challenges, the integration of cryptocurrencies into mainstream financial systems, and the potential long-term implications for traditional banking and monetary policy. 9. Investigating the determinants of success for fintech startups. Fintech startups are driving much of the innovation in the financial services industry, but the path to success in this highly competitive and regulated environment is far from easy. Many fintech startups face challenges related to funding, scaling, regulatory compliance, and market adoption. Key determinants of success for fintech startups include access to venture capital, the ability to navigate complex regulatory environments, and the development of user-friendly, secure platforms that meet consumer needs. Startups that can form strategic partnerships with established financial institutions may also have an advantage in gaining credibility and expanding their customer base. Future research could explore the factors that influence the success or failure of fintech startups, providing valuable insights for entrepreneurs, investors, and policymakers. FinTech is rapidly transforming the global financial landscape, offering new opportunities for efficiency, inclusion, and innovation. From blockchain to AI, from peer-to-peer lending to open banking, the potential for FinTech to reshape financial services is immense. However, alongside these opportunities come challenges related to regulation, cybersecurity, data privacy, and the integration of new technologies with existing financial systems. As the fintech ecosystem continues to evolve, it will be critical for industry leaders, regulators, and researchers to work together to ensure that the benefits of fintech are realized while mitigating risks. With ongoing research and innovation, fintech has the potential to drive positive change in the financial sector, improving access to services, enhancing customer experiences, and fostering greater financial inclusion worldwide.